chapters 12 and 13 for today, and then tomorrow we will begin with chapter 14. Now, in chapters 12 and 13, both of these chapters involve study of derivatives. Now, in chapter 12, we focused on interest rate swap, which was illustrated by problem 12-1. So in interest rate swap, we may recognize either an interest rate swap receivable or interest rate swap payable. Okay? It will be an interest rate receivable if the stated rate at the inception of the contract, the rate of interest is lower than the prevailing interest rate at any date. So, like in problem 12-1, since the rate of interest on January 1, 2020 is 12%, and in assumption number 1, the prevailing interest rate is 14%. Now, there is an interest rate swap receivable, which also will be credited to unrealized gain on interest rate swap. On the other hand, if the given rate at the start of the contract is higher than the prevailing interest rate as of a certain date, just like in assumption number 2, then we can say that we record an interest rate swap payable, which also will give rise to an unrealized loss. Now we have this illustrated in problem 12-1. Okay, now we go to problem 12-3. Actually, this was already taken up in the other section, but we have not. So let's take up problem 12-3. In January 1, 2020, Citadel Company received a 5-year variable interest loan of 3 million with interest payment at the end of each year and the principal to be repaid on December 31, 2024. So that is for a period of 5 years. And the interest rate is 8%. And the rate in each succeeding year is equal to market interest rate on January 1 of each year. In connection with the loan, the entity entered into an interest rate swap agreement with another financial institution. And the entity will receive a swap payment if the interest on January 1 is more than 8%, and will make a swap payment if the interest is less than 8%. The swap payments are made at the end of the year. This interest rate swap agreement was designated as a cash flow hedge. Now, yes, last Saturday, we were able to mention about the different hedges, like the cash flow hedge, and the other one is the fair value hedge. Okay, so on January 1, 2021, the market rate of interest is 9%. So in other words, it's higher than the rate at the beginning of the contract. And on January 1, 2022, the market rate of interest is only 6%. You are also given the present value factors at 9% for 4 periods, 3.24. 4 periods because we have a total of 5 years minus 1, so we only have 4 years. And the second present value of an ordinary annuity of 1 at 6% for the remaining 3 periods. Prepare journal entries for 2020 and 2021 in connection with the loan and the interest rate swap agreement. Now take note that we are given two present value factors, and we will be using both of these. Okay, so let's now begin with the entries in 2020, January 1, with debit to cash and credit loan payable. And on December 31, first we debit to interest expense and credit to cash for the annual interest at 8% times 3 million. So 240,000. Then on the same date, we debit to interest rate swap receivable and to credit unrealized gain interest rate swap. The fact that we have a receivable and a gain because the interest rate at the beginning is only 8%. And now at the end of the year, it's already 9%. So in other words, the company has an unrealized gain. And we multiply 30,000 by 3.24. 30,000 is arrived at by deducting from 9%, 8%. So we have 1% multiplied by 3 million or 30,000. So again, the unrealized gain is credited by 97,200, credited by multiplying 30,000 by 3.24. Okay? And at the end of the year, the company will receive 30,000. That's the amount of realized gain, no? So that will be 30,000 computed at 1% of 3 million. But since it's good for a period of 4 years, so we have the present value factor used. The company has another interest rate, kaya ang interest rates are floating. So again, at the end of the second year, we have to consider another present value factors. Okay, so the present value of the 4 annual payments of 30,000 is already recognized at the end of December 31, 2020 as interest rate swap. So that's why we have your unrealized gain. Then also, we have to, the next entry will be to debit interest expense for 270,000 and to credit cash for 270,000. Now that is the second interest payment. Now it's already at 9% because the new rate of interest on January 1, 2021 is already 9%. So we now debit to interest expense 270,000 at the end of 2021 and credit to cash. And then the second entry is to debit cash by 30,000 and to credit interest rate swap receivable. The account title that we debited last year for 97,200, now we have to credit back 30,000. Okay, now that is at the end of 2021. Then likewise, we debit to unrealized gain interest rate swap by 30,000 and credit to interest expense. Interest expense, take note, if During the year, we first debited interest expense by 270,000. Now we credit the same account for 30,000 because of the gain that is due to the 1% difference in interest rate. So, in any case, the interest expense to be recognized on the loan is 240,000 a year, regardless of the changes in the interest rates, as we consider the interest rates as variable. So, in other words, if in the year 2020, you debited interest expense for 240,000 only, and you have no adjustments to the account, it's 8% of 3 million. In 2021, the amount of interest expense will remain at 240,000. However, we first debit interest expense for 270,000. That's the actual amount paid because of 9%. But we credit back interest expense for the 30,000 being considered initially as the unrealized gain. And also the company is receiving from the bank the amount of 30,000 cash because of the change in the interest rate. So we have that entry. And finally, in 2021, since there is another present value given because at the beginning of 2022, there is again a new interest rate. We now close the account, unrealized gain, interest rate swap for the remainder of 67,200 and credit interest rate swap receivable. Now the amount of 67,200 has a difference between the original credit to unrealized gain of 97,200 and we debited back the account on December 31, 2021 for 30,000. So the remainder that we have to close by debiting unrealized gain, interest rate swap, 67,200 and credit interest rate swap receivable by the same amount. Okay, so these are our entries in 2020 and 2021. Now, in connection with the succeeding transaction whereby the company recognized the decrease in the interest rate. Now, on January 1, 2022, the market rate of interest is already 6%. So if we continue with 2022 information, then of course, at the end of the year, we again have to debit interest expense amounting to 6% of 3 million. And that is only for 180,000. Kaya nag 6% na lang of 3 million. 180,000 and you pay that in cash. If you will recognize the entry for the payment at the end of the next year, okay? At the end of the next year. Or you can consider the payment of the interest stated in the first paragraph, that interest payment at the end of each year and the principal to be repaid on December 31, 2024. So also in 2022, we have to recognize the unrealized loss, interest rate swap, and credit to interest rate swap payable. There is a payable because the interest rate is only 6%. At the start, it was 8%. So actually, the company has a loss because the interest rate declined, while it is considered as the obligation of the company to pay interest and to record interest expense for each year equal to 240,000. So what will be the entry to recognize the unrealized loss again? Debit to unrealized loss, interest rate swap, and credit to interest rate swap payable, 160,200. And that is taken by multiplying 2% times 3 million. 2% is 8%, the initial rate, minus the present rate of 6%. So we only have 2%. Multiply that by 3 million, you get 60,000. And multiply that by the present value factor of 2.67. So you get 160,200. And at the end of 2022, the company should pay, aside from the interest that's equal to 6% of 3 million or 180,000, the company should also pay an additional 60,000 at the end of 2022 and also for the remaining 2 years. So that our entries in 2022, the first entry will be to debit interest expense for 180,000. That's 6% of 3 million. 180,000 and credit to cash. Second entry will be to debit unrealized loss interest rate swap by 160,200 and credit interest rate swap payable for the same amount. And then another entry will be to debit interest rate swap payable by 60,000 and to credit cash by 60,000. And the last entry in 2022 will be to debit interest expense and credit unrealized loss by 60,200. Debit interest expense and credit unrealized loss interest rate swap by 60,000. So if you look at the amounts that we debited to interest expense during 2022, first it was 180,000 and second it is 60,000. So all in all, that's still 240,000. So that if you are asked how much is the interest expense during the year, it is still equal to the original interest rate times the principal. In this problem, it is still 240,000. Regardless of the adjustments to the interest expense account, it should still end up to that amount equal to the initial interest rate times the principal amount. Okay? Now we have already exceeded the requirement. It's only up to 2021. We have already continued up to 2022 to give consideration to the new interest rate. Okay, by the way, if you want to repeat the lecture, in the next sections, I will have this in the YouTube. So you can just open the YouTube, you look at the announcement in the Canvas portion. I have there the announcement And likewise, the link where you will open in the YouTube and you have a corresponding link. Okay, now we go to 12.6. That's a multiple choice problem. The rest are multiple choice problems. Now here we have the principal of the loan equal to 3 million and the variable interest rate is 12%. And the interest rate is equal to the prevailing interest rate at the beginning of the year. That is in 2021. And the principal of the loan is payable on December 31, 2021. The interest is payable at the end of each year. On January 1, 2020, the company entered into a receive variable pay fixed interest swap agreement with a bank speculator designated as cash flow hedge. The prevailing interest rate on January 1, 2021 is already 14%, and you are given the present value factor. Take note that the variable interest rate as of January 1, 2020 was 12%. Okay? Now, what amount should be reported as the interest rate swap receivable on December 31, 2020? Now, if we have to trace back the entries, which I did, no? Though it's not required by the problem, but I believe it will help. If you have to trace back the entries in January 1, 2020, first we debit to cash for 3 million and credit to loan payable. That's for the principal. Okay, so that is now your primary instrument for 3 million. At the end of 2020, we debit to interest expense, credit to cash at 12% of 3 million. So it's 360,000. Then, on the same date, we also debit interest rate swap receivable and credit unrealized gain interest rate swap. We have a gain because the new rate is higher. So we now multiply 2%. That's the difference between 14% and 12%. We multiply 2% by 3 million and multiply it by the present value factor of 8.877. So repeat, 2% times 3 million times 0.877. That's why we get 52,620. Then at the end of 2021, we debit again interest expense, credit to cash. Now the interest rate is already 14%. Multiplied by 3 million will give 420,000. Next, we debit to cash for 60,000. And the credit to interest rate swap receivable, the amount that we debited was 52,620, and also credit unrealized gain interest rate swap for 7,380. So that, repeat, the entry is debit to cash 60,000 and credit interest rate swap receivable, credit unrealized gain interest rate swap 7,380. The receivable will be credited for 52,620. So now the receivable account is already close to zero. The unrealized gain is with a total of 40,000. More entries at the end of 2021 with debit to loans payable for 3 million and credit to cash since the payment was at the end of 2021. And the last entry will be to close unrealized gain interest rate swap for a total of and we credit to interest expense. In other words, again, will reduce interest expense. Now, referring to the T account for interest expense, if you debited interest expense for the interest paid in 2021 for 420,000, but credited the account based on the last entry, you credited for 60,000. The net amount of interest expense is still 360,000. As mentioned earlier, the amount of interest expense every year will still equal to the interest rate at the start, or the variable interest rate multiplied by the principal. So for the letter answers, number 1, boy, number 2, A. For problem 12.6. 12.7, requirement number 1, what amount should be reported as interest rate swap payable on December 31, 2020? Now, it is payable as we have to compare the interest rate at the beginning was stated at 10%. At the end of the year, it's already given at 7%, or at the beginning of 2021. So meaning there's a loss and corresponding payable. What amount is credited to interest rate swap payable, where we debit to unrealized loss, interest rate swap, and credit interest rate swap payable for 3% times 5 million times 0.935. So it gives 140,250. 140,250. It's taken by multiplying 3% times 5 million times 0.935. How we got 3%? It's the original rate of 10%, and now the prevailing rate is 7%. So we have 3%. Answer to number 1 is B as in boy. What amount should be reported as interest expense for 2021? So it's still the amount of the interest rate of 10% multiplied by 5 million or 500,000. Letter A. So if you want to base it on the entries, your first entry is to debit interest expense for the amount of interest paid, 7% times 5,350,000. And the second entry affecting interest expense is to debit interest expense by 150,000 and to credit unrealized loss. Your 150,000 is the 3% times 5 million. So anyway, you can go on with the entries. Debiting interest rate swap payable, 140,250. Debit further, unrealized loss, 9,750, and credit to cash. Initially, you got debit to unrealized loss by 140,250 and credit interest rate swap payable. So again, the answer to number 2 is letter A. That's now the amount that is based on the original interest rate. That is at 10% of 5 million. So letters B and A for requirements 1 and 2. Now we go to 12-8. In January 1, 2020, the company borrowed 5 million. The variable interest rate is given at 6%. On January 1, 2020, 10% on 21 and 8% on January 1, 2022. The market rate of interest every January 1 resets the variable rate for that period and the amount of interest to be paid on December 31. In conjunction with the loan, the entity entered into a receive variable pay fixed interest rate swap agreement with another bank speculator as a cash flow hedge. The present value factors are given. That's for annuity of 1 at 10% and at 8%. No? Given, so we have the present value factors. Okay, so what is the notional amount of interest rate swap? When we talk about notional, I have given the definition of that term last Saturday. Actually, notional is the amount of money associated with the whole transaction or with the initial transaction. So the notional here is the principal amount of the loan, that is 5 million. That's the notional. What is the derivative asset or liability on December 31, 2020? When do we have it as an asset and when do we have it as a liability for this purpose? Now take note that the amount of the loan is 5%. The original rate as stated. What are the market rates? The market rate 6% on January 1, 2020, 10% on January 1, 2021, and 8% on January 1, 2022. But we are given the present value of an ordinary annuity of 1 at 10% for 3 periods. That's for the remaining 3 periods. Kaya ang 4 years, 1 year expired na in 2020. So we still have the remaining 3 years with the initial prevailing rate of 10%. And on January 1, 2022, there's another rate at 8%. Okay, for the remaining 2 periods. What is the derivative asset or liability on December 31, 2020? The original rate was 6% and the current rate at the end of year 1 is 10%. So meaning it increased, that's why it becomes a receivable. It is again, we have 10% as the new rate and the initial rate was only 6%. So we have a decrease at this time, an increase, no? An increase in the rate from 6 to 10%. So the difference is 4%. Then you multiply that by 5 million or 200,000. And 200,000 you multiply by 2.49. Now that is receivable and likewise an unrealized gain, 498,000. 5 million times 4% times 2.49. What is the derivative asset or liability on December 31, 2021? So again, from 6%, naging 8%, meaning there is an increase by only 2% of 5 million or 100,000. We multiply it by 1.78. So the derivative asset is still an asset, a receivable, because of the increase in the rate. So 178,000 asset. Take note that if the rate increase from the initial rate to the present, that is a receivable. Kung increase, kung mag-decrease, it's a payable. Okay, so we have now for 12-8, number 1, letter A, number 2, letter C, and number 3, letter C. 12-9, what is the derivative asset or liability on December 31, 2020? On January 1, 2020, the loan was 5 million, good for 4 years, with interest payment occurring at the end of each year and the principal to be paid at the end of 2021. So, bali 2 years. The interest for 2020 is the prevailing market rate of 10%. So, amo ni ang aton nga initial rate. And the market interest rate every January 1 resets the variable rate of interest for that year. The underlying fixed interest rate is 10%. In conjunction with the loan, the entity entered into a receive variable pay fixed interest rate swap agreement as a cash flow hedge. The interest swap payment will be made on December 31 of each year. The market interest rate is 6% on January 1, 21 and 7% on January 1, 22. Take note that the interest rate at the beginning of the year 2020 was 10%. 10%. And then, ang 10, nahimo na lang nga 6%. And later, nahimo nga 7%. So what is the derivative asset or liability on December 31, 2020? So, the original interest rate of 10% and the present on January 1, 21 is 6%. In other words, there is a decrease by 4%. 4% of 5 million is 200,000. And you multiply that by, you are not given the rate in the problem. You are supposed to determine the rate, the present value factor of an annuity of 1, and you determine the rate. Did you pila ang rate? Present value of 1, that's now at the interest rate of originally you have 6% and later on it's 7%. So you look for the present value of an ordinary annuity of 1 at 6% for the remaining 3 periods. And the second is present value of an ordinary annuity of 1 at 7% for 2 periods. Okay, can you determine the present value factors? First, present value of an ordinary annuity of 1 at 6% for 3 periods. What is the factor? Anybody? Ano ang factor? I know you can determine the factor, you know how, and or you can see there are books that will give the present value factors. Anybody who can give us the factor? Present value factor, present value of an ordinary annuity of 1 for 3 periods at 6%. Is present value of an ordinary or annuity of 1 at 7% for 2 periods. Factor? Anybody?
2.7.
The book does not give. So it's understood that we have to determine the rate. So pila, anybody nga naka-compute na dira, ano ang factor? Anybody? Can you hear me? You cannot? No? Hi. Hello. Good morning. Anybody who knows how to determine the present value factor? Sino na ang naka-determine dira, naka-compute? Sino? Wala, Gil?
Number ano, tatagalin mo.
Present value, man, ordinary 31 at 6% for 3 periods. Ano ang rate? Ang factor?
2.67, ma'am.
2.67.
67.
Good. 2.67. Di ang present value of 1 for 2 periods at 7%. Lower ina. 2 periods na lang. Ano ang
1.81, ma'am.
1.81? Very good. Okay? So we now go to requirement number 1. What is the derivative asset or liability on December 31, 2020? Or that is January 1, 2021. So we now compute 200,000 times 2.67. 200,000 is 4% times 5 million. 200,000. 4% is the difference between 10% and 6%. So you'll have 4% times 5 million. You now get 200,000 times 2.67. Okay, you get 534,000 being a liability. So it is a loss, unrealized loss. Sa liability and the corresponding unrealized loss if the initial rate is higher than the current prevailing rate. So 10 and 6. Answer to number 1 is D as in dog. How about number 2? What is the derivative asset or liability on December 31, 2021? Now it's 10% as the initial rate. At the beginning of 2022, it's only 7%. So we now get a difference of 3% times 5 million. It gives 150,000 and you multiply it by 1.81. 150,000 times 1.81 giving us 271,500. It's a liability. What amount of interest expense should be reported for 2020? As I have mentioned, regardless of entries that will be prepared, including adjustments to interest expense, the amount of interest expense for the year is still computed by multiplying the initial rate by the principal. So the initial rate is 10%, and then you multiply that by the principal of 5 million. So you get 500,000. Okay? Or anyway, if you want to go on with the entries that will involve adjustments to interest expense, you may do so. So the answers to 12-9, number 1, dog, number 2, boy, number 3, A. Next, 12-10, what are the requirements? What amount should be reported as the interest swap receivable on December 31, 2020, on December 31, 2021, and what is the amount of interest expense? January 1, 2020, the company received a 5-year variable interest rate loan of 6 million with interest payment at the end of each year and the principal to be repaid at the end of 2024. So that is for a period of 5 years. The interest rate for 2020 is 8%. That is the initial rate. And the rate in each succeeding year is equal to the market interest rate on January 1 of each year. On January 1, 2020, the company entered into a receive variable pay fixed interest rate swap agreement with a financial institution. The swap payments are made at the end of the year. This interest rate swap agreement is designated as cash flow hedge. On January 1, 2021, the market rate of interest is 9%. So meaning from 8 to 9%. The present value of an ordinary annuity of 1 at 9% for 4 periods is 4 periods because you have 5 years minus the first year. So you still have 4 years. On January 1, 2022, the market rate of interest is 12% and the present value of an ordinary annuity of 1 now at 12% for 3 periods. So you are now dealing with a new interest rate that is at 12% for the remaining 3 years. On December 31, 2020, what amount should be reported as interest rate swap? From 8% to 9%, there is an unrealized gain and a receivable. So we now have 1% multiplied by 6 million or 60,000. Multiply it by 3.24. We now get C, 194,400. C. On number 2, on December 31, 2021, what amount should be reported as interest rate swap receivable? From 8%, now it's already 12%. So we have 4% times 6 million or 240,000. Then we multiply that by the present value factor of 2.4, giving us the amount to be reported as interest rate swap receivable equal to 576,000. So letter C. And number 3, the interest expense for 2021 is still the initial interest rate times the principal. So we have 480,000. Again, answers to 12-10. Number 1, C. Number 2, C. And number 3, C. Okay, we go to the multiple choice theory. 12-11. Number 1, C. Number 2, A. 3, boy. 4, boy. 5, C. 6, no. 12-12. 1 dog. Number 2, dog. 3, boy. 4, A. 5, dog. Okay? That's all for chapter 12. And now we go to chapter 13. Chapter 13 is now related to most 12 interest rate swap. This time we have your forward contract and foreign, no? So we have the next two, future contract and forward contract and option. So forward contract, futures contract, and option contract. Now let's have the two straight problems as illustrative problems before we move on to multiple choice number 9 up to multiple choice number 14, 15. Okay, 13-1. The company is a golf course developer that constructs approximately 5 courses each year. On July 1, 2020, the entity has agreed to buy 5 trees on March 1, 2021, next year pa, to be planted in the courses it intends to build. To protect itself from the variability of uh, the market price of trees, the entity entered into a forward contract with a reputable bank. The price is set at 1,500 per tree. The forward contract is designated as a cash flow hedge. If the market price on March 1, 2021 is more than 1,500, the difference is paid by the bank to the entity. So, bali may ginansya pagid ang entity. On the other hand, if the market price is less than 1,500, then the entity will pay the difference to the bank. The market price is 1,800 on December 31, 2020, and 1,700 on March 1, 2021. Both prices are higher than 1,500. Okay, prepare entries for 2020 and 2021. Now let's start with 2020. Debit, forward contract receivable, and unrealized gain forward contract. Okay? So we have now December 31, 2020, ang market price is already 1,800. Isang year end na, isang 2020. So gani kay 1,800, pero ang iyang price nga ginset 1,500 lang. So on December 31, 2020, Tagaytay Company should recognize an unrealized gain equal to 300. 1,800 minus 1,500, no? So there's a difference of 300, and then we multiply that by 5,000 trees. 5,000 trees. 5,000 multiplied by 300. So that gives us 1.5 million. Debit again, forward contract receivable and credit unrealized gain. Forward contract for 1.5 million. Taken by multiplying 5,000 trees by 300. That's now the increase in the market price as compared to the original price set. Okay? That is your entry on December 31, 2020. Now we go to 2021. The first date in 2021 is March 1. On March 1, we debit to unrealized gain forward contract and credit forward contract receivable in connection with the entry in 2020. So we now have 500,000 only. Why 500,000? The market price on January 1, 2021 is 1,800. And now it's reduced to 1,700. So meaning we have to debit back unrealized gain for 100 times 5,000. 500,000 and credit forward contract receivable. Repeat, Entry on March 1, 2021. Debit, unrealized gain, forward contract, and to credit, forward contract receivable for 500,000. And it's computed as 1,800 minus 1,700 times 5,000. So we now get 500,000 on March 1. That is the first entry. Still on March 1, 2021, now this is the date when the trees, as agreed, will be planted in the courses Tagaytay Company intends to build. We now debit to tree inventory and credit to cash. Debit to tree inventory, 5,000 trees times 1,700. So you now get 8.5 million. 8.5 million. Okay? 8.5 million. Ang market price is 1,700. So the entry again on March 1, 2021, debit, 3 inventory, credit cash, 8.5 million. Then debit to cash, credit, forward, contract, receivable. Ang balance ng imong receivable is still 1 million. Ay ang 1.5 sang December 31, 2020, 1.5 million was debited. However, on March 1, 2021, there was a credit by 500,000. So the amount that we debit to cash and credit to forward contract receivable is 1 million, as you can find in your T accounts. Debit to cash, 1 million, credit forward contract receivable by 1 million. Okay? So the bank pays the company since it is the agreement. Okay? So now we have this second entry. We debit to unrealized gain by 1 million and the unrealized gain on forward contract, no? Amo nang aton nga gain credit and we credit back to 3 inventory. I'll repeat the last entry. Debit unrealized gain on forward contract. The balance of the account is still 1 million nga credit. Now we debit. So debit unrealized gain, forward contract, 1 million, and credit, 3 inventory. Credit, 3 inventory. So we now close the account. Forward contract receivable is now brought to 0. We have already closed unrealized gain. Forward contracts already brought to 0. And the accounts that remain are 3 inventory, 8.5 million minus 1 million. 3 inventory is left with a debit balance of 7.5 million. And of course, we have cash. Okay, so these are the entries in 13-1. We are trying to illustrate forward contract. Next, in 13-3, the company requires 50,000 kilos of soya beans each month in the manufacturing operations. To eliminate the price risk associated with the purchase of soya beans, on December 21, 2020, the entity entered into a futures contract as a cash flow hedge to buy 50,000 kilos of soya beans at 150 per kilo on February 1, 2021. Now take note, our Chapter 12 involves interest swap. In 13, we have forward contract, future contracts and options. Okay, the entity entered into a futures contract as cash flow hedge to buy 50,000 kilos of soya beans at 150 on February 1, 2021. Now, prepare journal entries for 2020 and 2021, assuming number one, the market price per kilo of soya beans is 160 on December 31, 2020, and 165 on February 1, 2021. The market price per kilo of soya beans on December 31, 2020 and February 1, 2021 is 145. Okay, now what are the entries? First, we follow assumption number one, that the market price on December 31, 2020 is 160 and on February 1, 2021 for 165. First entry in 2020 by December 31. Debit future contracts receivable by 500,000 and credit unrealized gain future contracts unrealized gain future contracts. So we now get 50,000 multiplied by 10. Debit future contracts receivable 500,000 and credit unrealized gain future contracts 500,000. That's taken by multiplying 50,000 kilos by 10. How did we get 10? That's the difference between the current market price of 160 minus 150. So there is an unrealized gain. 2020. In 2021, February 1, we now debit future contracts receivable and credit unrealized gain future contracts for 50,000 times 5. Remember, this is already 2021, and as stated, we have the market price equal to 165 on February 1, 2021. So in 2021, again, the first entry is on February 1, debit future contracts receivable by 250,000 and credit unrealized gain future contracts by 250,000. Again, that's the difference between 165, the present market price, and 160. 165 minus 160 or 5, and then we multiply that by 50,000. So we end up with 250,000. That was the entry on February 1, the first entry. Second entry now is to purchase at 150 per kilo. That's the original price. However, the present market price is already 165. So we now debit to purchases and credit to cash, multiplying 50,000 by 165. Debit purchases, credit cash, 8,250,000. Debit purchases, credit cash by 8,250,000. 50,000 times 165. Still on February 1, 2021, we debit to cash and credit future contracts receivable, the sum of the debits previously made to future contracts receivable for 500,000 and 250,000. So repeat, debit to cash, 750,000 and credit future contracts receivable by 750,000. And the last entry on February 1 is to debit unrealized gain on future contracts. First, we have a debit of 500,000 and second, a credit of 500,000 and a credit of 250,000. We have to debit both to unrealized gain future contracts and credit purchases by 750,000. In other words, the unrealized gain of 750,000 arising from the increases in the market prices is now credited to purchases as an adjustment to purchases. So in other words, your purchases account initially debited at 8,250,000 will be reduced. No? Will be reduced by how much? That will be reduced by 750,000. Will be reduced by 750,000. And what is that amount of 750,000? Actually, that is your unrealized gain. Kaya ang imong unrealized gain resulted because of the increases in the market prices. Okay? So will you now continue with the 13 with the second requirement? Number 2, the market price per kilo of soya beans on December 31, 2020 and 2021 is only 145,000. So what will you do with that? Kaya nag 145 na lang. If you are going to make the entries, no? As you will continue with the entries of requirement number 2. Ano ang imo nga entry for that? Kaya ang imo nga entry will be, you will have an adjustment on February 1, 2021, giving the market price only equal to 145. So, diin kita mahimo sang adjustments. So, that will be your second entry. Okay? Now, second, option for requirement number 2. Requirement number 2. Okay? Now, I leave that to you. Requirement number 2, no? Plus, kagahod isang ulan. Daw, hindi ko ka bati. Kay kabas ko, gid. Ambot ko ay ko kabalo kung nga amo ni. So, anyway, I'll continue with 13-9. Tamo pa, 13-10, 11, 12, 13, 14, and 15. We still have pila pa ka minutes, 14. So I'll just try with the multiple choice to finish. By the way, I am having this recorded, but the recording will be up to 11 o'clock only. So I will now try to finish on the multiple choice with the remaining 14 minutes. Okay, follow up with 13-9. 13-9, the answer to number 1 is, what is the notional value of the forward contract? So again, when we talk about the notional figure, it's 8,000 times 1,200. Ang 8,000 amo ni ang number of kilos. Ang 1,200 amo ni ang original price on October 1, 2020. That was the date when the company determined that it would need to purchase 8,000 kilos. So the notional figure or value is letter B, 9.6 million. What is the derivative asset or liability on December 31, 2020? Now, with the market price of 1,500, that is on December 31, 2020, and you have now your underlying fixed price 1,200. So 1,500 minus 1,200, the derivative is now 300, which is an asset because the present market price exceeds the original market price. So 300 times 8,000, that gives us 2,400,000, and you multiply that by the present value factor, which is 0.91. So we now get 2,184,000. It is an asset because the present market price exceeds the initial market price. So letter C. Number 1B, number 2C, and number 3. What is the derivative asset on December 31, 2021, when the market price has reduced to 1,200? The market price, on January 1, 2022 is only 1,000. That is the price per kilo. Pero ang initial price was 1,200. So in other words, there is a reduction in the value equal to 200 multiplied by 8,000, that gives 1.6 million. So it's a liability because the initial price is higher than the current market price. So answer to number 3 is B as in boy. Next, number 13-10. What is the derivative asset on December 31, 2020? When the market price per kilo is 110 and the original option strike price is 100. So there is an increase by 10 multiplied by 50 kilos. We now get 500,000. What is the derivative asset on December 31, 2020? So it's now 10 multiplied by 50,000, 500,000. What is the cash settlement from the speculator on July 1, 2021? So with the 50,000 kilos and by the July 1, 2021, amo na ang date na mabakal gid siya, the market price has already increased to nag 115 na. So 115 minus 100, there is already an increase by 15. Therefore, the cash settlement from the speculator is 15 times 50,000. Actually, you have the excess over 100. Okay, so number 2 is A. Number 1A, number 2A. Number 3, what is the cost of purchases? On July 1, 2021, it's now 50,000 times 115. 5,750,000, and then we deduct 700,000. We deduct 700,000. 700,000 actually amo na ang imo nga unrealized gain. Nga ang nag 700,000. Okay? Which you have to credit back to purchases. Initially, may ara ikaw nga 110 minus 100. So you get 10 times 50,000. You get 500,000. Amo nang imo nga call option. Ibuhin mo ang ginbayad ya nga initial nga 50,000 nga iya nga initial option price for 50,000 for the call option. So we have only 450,000. And second, for the reduction, 750,000 multiplying 50,000 by 15, 750,000, we deduct the 500,000 in the first computation. We have the increase in fair value of 250,000. So the total of 450,000 and 450,000 is 700,000. Amo na ang i-deduct mo sa 5,750,000. So you get 5,050,000. Anyway, if you want to really trace back the entries in arriving at 700,000, then you may do so. First entry for that, no? If you want to make an entry, kay ano na ni option. So your first entry is to debit call option by 50,000 and credit to cash. Amo na ang December 1, 2020. Debit call option, credit to cash. Second, December 31, your first entry is to debit call option 450,000 and credit unrealized gain 450,000. Repeat, entry on December 31, 2020. Debit call option and credit unrealized gain from call option 450,000. 450,000 is a difference between 500,000 and 50,000. The amount that you paid for the call option. So, bali ang balance is now your unrealized gain, 450,000. I'll repeat, ha? The entry on December 31, debit call option, 450,000. Credit unrealized gain, 450,000. Then on July 1, 2021, you again debit the amount for the call option, debit to cash, for 750,000 and credit call option for 750,000. Amo na ang imo nga total nga unrealized gain. However, prior to that, you debit call option 250,000 and credit unrealized gain 250,000. So, next entry, debit to cash, 750,000 and credit call option 750,000. And your next entry will be to debit unrealized gain 700,000 and you credit to purchases 700,000. So gani, nag-debit ka purchases for the gross amount of 5,750,000 and you credited to cash. However, kung mamangkot ang problem, what is the cost of purchases? It's only 5,050,000. Kaya nga, i-credit back mo ang 700,000 to purchases arising from your unrealized gain. Okay, so you get letter C for number 3. Next, 13-11. 13-11, answer to number 1. What is the derivative asset on December 31, 2020? So it's now equal to 28 minus 25 equals 3 times 200,000 units. So that's 600,000. It's an asset because the present market price is higher. Number two, what amount should be recognized as loss on call option in 2021? The loss is only pertaining to the payment for the call option. Sa 2021, ang market price naging 21 na lang. Pero ang iyang original strike price was 25. So actually, ang imo diri nga i-record nga loss is only 20,000. Actually, kung maghambal kita nga call option, call is a right, no? It's a right. It's not an obligation. When we talk about call option, it means a right and not an obligation. So, possibility of having a gain, but the loss is only up to the amount paid for the call option. The fact that an option is a right and not a liability. So the loss on is limited to the amount paid for the call option. So it's only 20,000. What is the liability on call option? The liability is zero because again, call option is a right and not a loss that it will be incurred. The loss is only limited up to the amount of the payment for the call option. And what is the cost of purchases? 200,000 units, you multiply that by 21. So we have letter C for number 4. Next, number 12. In order to settle the option contract, the entity would most likely receive 200,000 from the bank. The call option is 10,000. So you debit it to call option 10,000 credit cash. Second is to debit call option and credit unrealized gain for 190,000. The 10,000 shares you multiply by 20. And the 20 so far is the difference in the market price. So we have now from 100 to 120. So 20 times 10,000 shares equals 200,000, but we deduct the amount paid for the call option of 10,000. So the entry on April 30 will be to debit call option 190,000 and credit unrealized. The unrealized account, no, for 190,000. That's the unrealized gain. Then the next entry will be to debit cash and credit call option for a total of 200,000. So the answer is letter C. Receive 200,000 from the bank. That is the difference between 120 and 100 or 20, and then we multiply by 10,000. So that is letter C. Then the last problem, 1313. What is the derivative asset or liability arising from the contracts on December 31, 2020? For sugar, it's 20,000. That's the unit of measure. And then we multiply by 15. 15 because the current market price is 75, given is 60. So you have an increase of 15 times 20,000 is 300,000. Ang milk, you have 50,000. The future price 100. However, for this time, in January 1, 2021, you are given only 91. So there is a corresponding loss by 9. Ang imo naman nga ice cream, nag 195. Here you have a difference of the original future price is 220. So actually, may 30,000 and you multiply by 25. Kay initially, ang imo nga 220 nahimo nga 195. There's a difference of 25. May initial nga 5 and then you have another 20. So what happens? The answer is letter B for the amount of 600,000. That's now your ice cream is 30,000 times 25. So we have the amount of letter answer 13-13 B as in boy. B 14 anay kay theory ni sulod time. Okay, for the theory, first we have 1 to 10. Again, number 1, 13, 14. Number 1, dog. Number 2, boy. Number 3, A. Number 4, dog. Number 5, dog. Number 6, dog. 7, boy. 8, dog. 9, C. 10, D. Okay, repeat. Number 1,
Ma'am, ano
dog.
ma'am ang 10, ma'am?
Dali lang. Siwat ko ah. Number 1, dog. Number 2, boy. Number 3, A. Number 4, dog. Number 5, dog. 6, dog. 7, boy. 8, dog. 9, C. And 10, D. Number 15, apat lang. Number 1, boy. Number 2, dog. Number 3, dog. 4, dog. Correct? So the answer is apat lang. By the way, let me announce, mahatag ako quiz tomorrow. That will be for problems lang. Problems lang. So just study the 2 chapters. Problems lang, gamay lang ah. Hindi kita makalawig. By tomorrow, we have chapter 14. Medyo malawig-lawig ini. Tomorrow is just Tuesday. Siguro mga duha pag ka adlaw ang chapter 14 before we go to, by the way, nag-announce na ko nga ang Sabado wala kita klase kay maubra pagid ka mo sa inyong nga project i-try ta lang nga maubos ang hasta chapter 23 kay kalawig pagid 14, 15, 16, 17, 18, 19, 20 pulo pa ka chapters. Okay, so anyway, just tell the other 2 classes, though I have already announced, i-off ko na ang Zoom, nga mahatag ako lecture, dito lang sila ma-open sa YouTube. Anyway, I have the announcement in the canvas, so hindi ko kay nag-post pa ako, maling pa. So, bali makita nila ni Guru hapon na, kay dapat ga-record na ko sa evening. Pero kay waay ko ka-record sa evening, tibag ko lang, i-off ko na ang Zoom, i-off ko na, kay basi may